Hi, I'm Pam Andes with Allen Matkins. I'm joined today with three experts in the industrial market from CBRE. On my right, Trace Reid, followed by Kurt Strasmann, and at the end, Dan De La Paz. Let's start with you, Kurt. On a regional basis, how is our region doing compared to the rest of the markets in the United States?
First of all, our region is really different and unique than the rest of the nation. And first and foremost, is due to the size. We are 1.7 billion square feet. And to give you an idea, the average big market is probably 250 to 300 million feet. So you can put in basically 7 markets right in our local region. And that includes Los Angeles, Orange County, and the Inland Empire. And on top of that, it's coupled with really the best fundamentals in the entire nation. And that's most evident by our vacancy rates. We track 51 markets nationally. And of the 51 markets, we have 3 of the 4 lowest vacancy rates. So Los Angeles is lowest at 2.3%, Orange County is the second lowest at 2.9%, and the Inland Empire is the 4th lowest at 4%. And to put that in context, the average national vacancy rate is about 8.2%, so we're dramatically lower. So when you combine the size and depth of the market, the great fundamentals that we have here, the unique driver with the port and the barriers to entry, there's a reason why we are the most sought after industrial market in the nation.
Well, that's positive news for the real estate industry. Dan, can you tell us what trends you're seeing in the Inland Empire and what the major indicators are?
Sure. There's a variety of trends that we're seeing in the marketplace. One of the more notable ones is the construction type of these warehouse buildings that are being built. We're seeing 36-foot clear is a new trend. There's a number of speculative buildings that are being built. Watson Land Company and Alaire Properties are building 4 different spec buildings at 36-foot clear. There's a couple build-to-suits out in the marketplace with BMW. There's another Fortune 50 company that's got 36-foot clear. And the driver is efficiency. Within these 36-foot clear buildings, you're getting about a 7 to 15% increase in cube capacity. And that really drives efficiencies when these different warehouse and logistics groups are looking for throughput within the buildings. Another driver in our market that we're seeing that's coming into the marketplace is e-commerce. And so when you're seeing some of these 36-foot clear buildings that are being built, you've got extensive material handling systems inside the space that go up higher so you can have more product to be sent out into the marketplace. From a value standpoint, we're seeing valuations in buildings 500,000 square feet and above remaining relatively flat because construction continues and demand continues, but it's not, we don't seem to have a demand and supply imbalance. Below 500,000 square feet, we're really seeing good activity with a number of tenants, limited construction, so we really think the marketplace is going to have about a good 5 to 15% growth in lease rate values.
Trace, have you seen this 36-foot clearance requirement?
The South Bay is a marketplace that is a little bit different in that we are very constricted in land, so we don't have a lot of new development. There is one building that's currently being built by Watson Land Company that will be 36-foot clear, but most of our product is in the 24 to 30-foot clear. And what we really see in the South Bay is more transloading. So we're not really warehousing as much product. The product's being come in and then distributed out into the marketplace at a much more rapid pace than something like in the Inland Empire.
Great. And how about you, Kurt? Anything that you see trend-wise?
Yes, I think there's a number of trends, but a bigger picture, I think what's really exciting is that in years past, we talked about this recovery being led with big business. Corporate America certainly was the leader, and I think it's trickled down now where it is very broad-based, and that goes to the large companies, mid-sized companies, all the way down to the small entrepreneurials. And so I think that's a really great trend that happened in 2013, and you'll see that continue. Secondly, in all our markets, I'm amazed at the demand for sale product. If you're under 200,000 feet, there's unbelievable demand there. And in the past, we would have said these buildings in 10 to 50,000 square foot range are real active, but it's all the way up to 200,000 feet. So I think that's a new trend. And then thirdly, this trend of development, Dan spoke about it and Trace spoke about it, is that you will see this continue. because there's some big success stories in each county. And in Los Angeles County, probably the best example is a development in Long Beach. It's a partnership between J.P. Morgan and Ceres Regis. They bought the former Boeing campus. It's about 190 acres. The first two phases of the project came out, about 800,000 feet. All the buildings were pre-sold prior to construction. And Trace will probably talk a little bit later about a very large lease he executed there. But it's a great fundamental, or a great trend to show what's going on there. In Orange County, there's another great project going on. It's a joint venture between Panetone Development and Clarion Partners, known as the Anaheim Concourse, another former Boeing site in the city of Anaheim. They're going through the first two phases right now. They have mid-sized buildings in that 50 to 150,000 square foot range. Based on the activity, all those buildings will be sold and leased prior to construction. And then in the Inland Empire region, back in 2012, Trammell Crow, in combination with Clarion Partners again, purchased about 75 acres in the Moreno Valley market. And that was when you really saw the recovery with big corporate America. And as they were going through trying to figure out what to build, they decided to go with a single building, pure spec, 1.2 million square feet. Actually, the largest spec building, I think, in America at that time.
Wow.
Once again, they had three parties at the table. They leased it to Amazon.com. But those are three really good examples of how strong that development market is moving forward.
Well, Dan and Trace, let's turn to you next, and maybe if each of you could showcase one deal or two from last year and give us some of the fundamentals and why it worked and challenges and uniqueness, whatever you want to share about a particular deal that comes to mind in light of what Kurt just shared with us.
Sure, thank you. I was involved in a transaction in Moreno Valley that was about a 1.5 million square foot build-to-suit. The teammates, Darla Longo and Grant Ross and myself, represented CalSTRS. They had Principal Financial and Panetone as part of their team. It was a fantastic build-to-suit that was inked in about the fourth quarter of last year. A couple of the unique features to that build-to-suit were really its timing. The Fortune 50 company wanted to be in the space within about 9 to 12 months upon execution of the lease. They had some really strong drivers to be in the marketplace, up and running, and Panetone was very successful in building this building. It's being completed right now. The tenant is already in the space, and the building will be fully complete here in about another 3 months. The building was a cross-dock facility. It had about a 600-foot depth, and it also was 36-foot clear. But it was probably the largest build-to-suit that was inked last year in America. A very well-known household brand name company, so that was a fun project to be involved in. Another one would be a build-to-suit that I represented BMW in taking down a 325,000 square foot building in Redlands. A couple of the unique features in that one, they wanted some expansion space, so they ended up going to Redlands with Prologis. There's about 100,000 square foot section of land that will allow them to grow to about 422,000 square feet. They also owned a building in Ontario that Prologis is purchasing, and then ultimately they tied the exact same type of transaction in Texas. It was a linked transaction.
So it's clear today that industrial location is still a real driver. Have any of you had projects that were in close proximity to the port, which seems like an ideal location if you're an owner?
I represent BlackRock, and we have a project that is directly across the street from the Port of Los Angeles. And we've had about a 338,000 square foot building that was vacant, and we were able to lease it to Huffy Bicycle. And Huffy looked at multiple sites in the basin and came to the determination that this location best served their needs because of the low cost of dray, being right there at the port, which allowed them to, they're going to bring in somewhere in the neighborhood of 10 to 15,000 containers a year. And being that close to the port was really, really important for them. The facility was a Class A facility that had lots of doors, big yard, and the lowest dray cost in the South Bay.
So out of curiosity, who left that building that it was vacant?
There was a third-party logistics provider who moved his product out to the Inland Empire.
Great. Well, let's just start with projections for this year. Dan, any?
I think 2014 is going to be a very solid year for the Inland Empire. I think we'll see values increase. I think we'll see this past year in 2013 we had about 30 million square feet of gross activity and close to 15 million square feet of net new activity. If I had to take my crystal ball, I would say that 2014 is probably going to be a little similar to that. You know, whether it's we've been averaging about 10 million square feet of net new absorption over the last 4 years, so we expect it to be in line with 10 to 14 million square feet of net new growth.
Kurt?
I don't want to be boring, but I think you're going to see a repeat of 2013. Really, we've been in a nice recovery mode for a bit, and I guess the question I'm asked a lot is, where are we in the cycle? And there's certainly niche anomalies, but generally speaking, I still think we're in the 4th or 5th inning of a 9-inning game. I think there's the fundamentals are there. There's great drivers, and I believe 2014 and the foreseeable future, our markets will continue to be the most highly sought after industrial markets in the nation.
Trace?
2014 is going to be a good year. I think we're going to have some good absorption in the South Bay, and I think we're going to start seeing pricing click up. I think land pricing is going up, and sale prices going up. We've got a lot of owner users who are out there actively pursuing opportunities because of the low cost of capital, and we're going to have another strong year.
That's great. Thanks for your time today. It's been very informative, and I hope 2014 is as good as you all think it will be.
Thank you very much.
Thank you, Pam.